heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Apple shares slide for a fifth day. That's as the iPhone maker sees a big drop in China sales to start off the week. With the stock in correction, we'll break down everything you need to know.
Plus, we stay with China as AMD faces a US roadblock in selling its artificial intelligence chips in the Chinese market. Bloomberg exclusive ahead.
And Bitcoin, it hits a fresh record for the first time since its peak back in November 2021. We'll have full coverage of the digital currency market and those meme coins caught up in the rush. There's so much more going on throughout this hour. Let's first check in on these markets because, Bitcoin's up, but the rest of the market still trying to digest some of the run-up that we've seen in particularly the AI-related names. And we focus in on what is some mixed economic data today, the US showing some services weakness. And we look ahead to testimony coming from Jay Powell on the Hill, his semi-annual experience over in terms of the politicians. What will the grilling mean? How much will he be reticent to say that they're looking at those rate cuts anytime soon? We're looking at 1.8% down on the NASDAQ now, so big tech feeling some of the big pain as we talk China, Ed. I want to focus the line on what's happening in China. These, of course, the traded names here in the United States with the Golden Dragon Index off by a percentage point as we see a 5% growth perspective coming from China. That target, how will they get there? And ultimately, what is the debt that they're going to be issuing, fueling in terms of the focus on AI, on technology coming from China? Not enough to buoy the stocks today in the Chinese names. I'm looking at the 10-year yield off by 7 basis points as we anticipate the Fed and Jay Powell's speech. Move on, have a look at what is happening in the asset class that we need to discuss a little bit today. Bitcoin does manage to hit that all-time high. We're above 69,000, happened at just after about 9 a.m., 9:30, 10 a.m., but we're looking at a 66 back to at the moment. Some profit taking as we hit that psychological level. Already we've seen the market capitalization eclipse that of 2021 because, of course, there's more Bitcoin in supply and they are worth up to what point 69,000. We're currently up 9.9% as we'll see over the course of what has been a mega run throughout 2024 in particular. 2023, though, they were in the doldrums of 2022, but we are back at that level that we hit in November 2021. Ed, what are you watching on the micro?
There is a lot in the news flow that is hitting technology shares. Tesla down almost 5%. A fire near its Berlin plant has halted production. Officials are investigating if arson was the cause of that fire. That's one news item. The other is data out of China that's a little softer, showing that maybe growth in China sales for Tesla not as strong. That stock under pressure. Two other big stories we're watching. We're going to head to DC in just a minute. Bloomberg reporting that US officials are going to block AMD selling a made-for-China lower spec GPU or AI accelerator. It's something similar to what NVIDIA did, and that seems to be weighing on shares too, down 1.8%, but in line with the broader market. Then you have Apple, down 2.8%, trading at its lowest level since October. We have data from Counterpoint Research, and that data shows that in the first 6 weeks of 2024, sales of the iPhone in China fell 24% year on year compared to that same 6-week period a year ago. I want to bring in Bloomberg's Mark Gurman and go through this data because the data also shows that other handset makers had a surge in sales. And so therefore, the market share picture in China, Mark, is changing with Apple dropping below 16% and Huawei now back above 16%. What's going on?
You know, this is hugely significant. We've known for a couple quarters now that Apple has been running into roadblocks in China. Certainly that new Huawei phone has been very popular, that new Mate device with the locally designed processor. We've known for a while there's been this sense of renewed nationalism in China where people are, maybe putting Apple purchases a little bit on the back burner and focusing on purchases from stateside companies. They also have been there's been some bans in some organizations owned by governments, government entities, where they don't want American-made devices. They don't want Korean-made devices like Samsung, so the impact has been there. But what's so interesting about this first 6 weeks number is that it's actually a little bit worse than it seems on the surface, right? Let's do a comparison. So what happened last year? The iPhone 14 Pro came out. Now, obviously, that was not as significant of an update as the iPhone 15 Pro. So from that perspective, you'd think that, a nicer phone, new design, titanium, that would sell better. But then we also remember that there were no supply chain issues this year. And last year, there were significant supply chain issues. There was a lot of pent-up demand for the iPhone in the first 6 weeks of 2023 because you really couldn't find an iPhone 14 Pro or Pro Max at the tail end of 2022. So not only is Apple down, they're down in comparison to a phone that was not as big of an upgrade, and they're down when there was so much pent-up demand for this device. So clearly not a terrific situation here, but I do see some momentum shifting. The iPhone 16 Pro is going to launch later this year. There are some cool new camera features that could excite that market. The other thing to note is that the Apple Vision Pro mixed reality, that's a pretty popular technology in China and in Asia in general. And I expect China to be one of the first markets to get that headset. So it's not all bad for Apple in China. There is going to be a little bit of a shift here, I think, later in the year.
I mean, thus far, this data coming from Counterpoint, it's their narrative, it's not Apple's. What are we hearing from Apple to try and regain that narrative? You, of course, pushed out a story yesterday about how they've been updating some of their MacBook Airs at the moment, so clearly bringing in faster chips. But we need to hear a little bit more about artificial intelligence as well. Your amazing scoop last week about the fact that they're putting back on the car, putting their technology experts to work in AGI, more focused, and generative AI. Does that mean that we could start to see a refresh and exuberance around purchasing?
Yeah, I mean, the big question is if a lot of these new AI features are going to be available globally, right? It could be sensible that Apple first rolls them out in English-speaking countries, right? And then they have a long roadmap ahead to expand the artificial intelligence features to China and some of the international regions. I'm not sure that AI is going to give a significant boost to their product sales. I think AI would be better served in terms of new revenue for future products. What kind of new devices can you enable thanks to AI, right? Things like more advanced headsets, augmented reality glasses, AirPods with cameras, tabletop robotics devices, and, before it was canceled, the car, of course. So certainly that's something to watch. Apple's not saying much. When they last spoke, they seemed pretty, excited about what's going on in China. They were referencing Counterpoint's previous report that indicated the iPhone is doing extremely well. And everyone who talked negatively about Apple in China was completely wrong. So this is a complete narrative shift. Now, again, the first thing you said, I think, was really important. This is Counterpoint's narrative. This is Counterpoint's numbers. Now, sometimes these numbers are correct. Sometimes they're completely incorrect. I would say on average, they give a fair idea of what's going on. So it's possible that the real situation is not as bad as Counterpoint is indicating today, but certainly there is some indicator from them, at least, that things are not as great as one would hope if you are an Apple shareholder.
Certainly, it's taken a big hit to market capitalization over the course of this year. Mark Gurman, as always, so fantastic to run through all Apple with you. Meanwhile, let's just stay with China as a narrative right now, because US officials have actually told chipmaker AMD its artificial intelligence chip designed for the Chinese market is too powerful. They can't sell it without a license from the Commerce Department. For more on that particular scoop, it's Bloomberg's Mackenzie Hawkins. And, well, what's interesting is AMD hadn't really been discussing what they were making for China, but you got the inside track.
That's right. So we've actually seen this story play out before with AMD's main American rival, NVIDIA, which publicly said, we are trying to design an AI processor for the Chinese market to align with U.S. export controls after those initial curbs were put in place in October 2022. And then the U.S. moved to tighten those restrictions about a year later, October 23. That captured NVIDIA's chip. The U.S. said, you can't sell that to Chinese customers. It allows them to develop AI models that pose a security risk. And since then, then we've seen NVIDIA release new processors for China that they say align with even the stricter restrictions. And also AMD trying to get into this market as well. AMD debuted a new suite of AI chips in December called the MI300 series. And this China-specific chip is a less powerful version of that broader lineup of products.
Right. The important thing here is there are two potential lines of rules that AMD has to follow. There is a technological restriction, a sort of blanket rule that says you cannot offer anything in China of this spec. And then there's the end user specific rule, which says you cannot sell to this company. Do we know which one AMD is caught by?
It's not yet clear which Chinese customer was trying to buy AMD's chip. So basically the process that they went through is there's a set of chips that are just deemed too powerful. No matter what, if you have chips at those specs, you need to apply for a US government license. Then there's a lower tier of chips for which you have to notify the US government of your intent to sell those chips to a Chinese customer, and they let you know whether you need a license. So that's what happened to AMD. They designed a chip that fell below the highest threshold, the most strict cutoff. But the US said, actually, you're not allowed to get an exemption from the overall licensing regime, and you are going to have to go through this onerous process. And now it remains to be seen whether AMD is actually trying to do that or whether they'll pivot away from this strategy.
And AMD down 1.8%, but the entire stocks is, and other chip names too. Bloomberg's Mackenzie Hawkins, terrific reporting. Thank you. Meanwhile, China's pledged to harness the entire nation's resources to speed homegrown scientific breakthroughs, reaffirming its priority to become self-reliant in spheres from AI to chip making to wrest technological supremacy from the US. At day one of the National People's Congress, Premier Li Qiang laid out the nation's priorities, which are still technological innovation and upgrading its industries, including new energy vehicles. Caroline.
Well, let's go over to what's happening in the world of politics right now, because it affects the world of technology. On this Super Tuesday, we're going to be discussing the impact of AI misinformation and what local election officers can be doing to prepare for that. That conversation coming up next. Meanwhile, check out what's happening with Meta shares. We're off by 1.8%. Yes, the rest of technology is off in sympathy today, but more broadly, we're looking at reports that showing Meta services are having issues. Now, Down Detector reporting plenty of problems, whether it be across Facebook, Instagram, and Messenger at the moment. Ironically, on X, the rival platform, is where we heard from Meta Communications Director Andy Stone saying they're aware of people having issues accessing its services and they're working on a fix. This is Bloomberg Technology. Now, let's get into the latest from today's Super Tuesday primaries and caucuses happening across the country. Bloomberg's Kayleigh Lyons has been very busy in anticipation of this day and throughout it. Kayleigh, what are we bracing for?
Well, we're bracing for what could effectively, Caroline, be the start of the general election tonight, because the frontrunner in the Republican primary, Donald Trump, could very well sweep all 15 of these states, which would get him not exactly at, but very close to the 1,215 delegates he needs to secure the nomination. Of course, Nikki Haley still is in the race. She has committed to staying in through the contest today, but it is unclear if her campaign will last beyond today, should she not actually come out as the victor in any of these states. The states to watch for her could be the likes of Vermont, maybe even Virginia, but if she can't win in those states, it's highly unlikely she will be victorious in any others. It's worth keeping in mind that Haley does have financing, theoretically, to continue her campaign as she continually pulls in millions of dollars from donors, $12 million in the month of February. Her campaign says another $1 million so far in March, but mathematically, it just might not be possible for her to secure the nomination after tonight, which means we could be looking down the rematch tunnel here of Trump versus Joe Biden, who also is highly likely to come out on top on all of the Democratic primary states today.
Kayleigh, I'm looking forward to joining you and Bloomberg's Joe Matthew this evening with our special show and coverage. When you look at California, right, Trump and Biden basically say, I just want to get it out of the way, get it done, even though it's the most populous state. What's probably more interesting is some of the dollars that originate from the state and some of the initiatives that they're backing.
Yeah, absolutely. And the down ballot races specifically, if you look at the Senate primary, for example, this is to replace the late Senator Dianne Feinstein in California. You have 3 Democratic members of the House, Adam Schiff, Katie Porter, and Barbara Lee, who are competing against one Republican, Steve Garvey, who you may know as a former Los Angeles Dodgers player. But California has a jungle primary, which means whichever two get the highest number of votes, be that Democratic or Republican, they are the ones that will advance to the general election in November. And crypto PACs specifically have been throwing a lot of money at this race, specifically throwing money against Congresswoman Katie Porter, spending about $10 million against her, which has actually helped Adam Schiff, who does have some more crypto-friendly language on his campaign website. So that's one of the races to watch. And I would just note, when you're thinking crypto, they're spending money in other states as well, like Alabama and North Carolina. So certainly the industry is trying to advance its objectives through dollars in some of these down ballot races this evening.
All right, Bloomberg's Katie Lyons, I'll see you in a few hours for our Super Tuesday coverage. Thank you very much. Let's keep the conversation going. There's something to discuss around the intersection of artificial intelligence and misinformation in this election cycle. Here's what some of our recent guests on Bloomberg TV have had to say about that.
Misinformation with artificial intelligence, I think that could be another factor that impacts what's going on around the election.
I don't think independent center-right Republicans or Democrats really have any idea about how effective AI can be if it's in the hands of specific individuals that have no moral boundaries.
The sort of the big things, if somebody does that deep fake, whether it's Joe Biden or Trump, then, we're going to be able to find that. You may not even need an algorithm.
So what we're seeing also is that the foreign disinformation campaigns could be very effective with AI, with deep fakes specifically.
There's much more subtle manipulation that I think we need to watch for.
Let's bring in Marcy Andino for her take. She's the Senior Director of the Election Infrastructure Information Sharing and Analysis Center, which supports state, local, and territorial election offices. You heard the diverse range of opinion. It is Super Tuesday. Social media is down. What do you think will happen tonight in the context of AI and misinformation?
Thank you so much for that question, and it's a pleasure to be here with you this morning. AI is certainly a new topic that we're talking about. We're talking and tracking 5 cybersecurity threats as we move into the general election, and AI is the new kid on the block, if you will. We're not seeing a lot of AI activity right now, but it certainly has the potential to increase misinformation campaigns. It will amplify or magnify the risk that already exists out there.
What your role does at the moment is you're offering tools, no-cost tools, it might be said, training to those who are out there in the field trying to ensure that this isn't spreading and that their elections have been run fairly. But also, you're providing sort of effective remediation if ever there are incidents. Talk us through what your go-to is in a response to any sort of sudden sweeping of a misinformation outbreak that might or might not occur as people head to polls.
Well, we've been talking with election officials over the last year about the possibility of seeing generative AI used to disrupt elections. And we're reminding election officials that they need to collaborate with us and share information so we can pass that information on to other election officials so they might know what's coming in their states. We also remind them probably the most powerful thing they can do is to educate voters, citizens, candidates, and even their local media. So when people see something that they think might not be exactly right, they know where to go to get accurate information, and that is with the state or local election officials. So it's very important that they establish themselves as the trusted source of information. And that even goes for training their staff in election offices. They work long hours. They get very tired. So they're more apt to click on something. And they bring in a lot of seasonal workers. So those seasonal workers may or may not have had any training. So it's important to make sure they're trained and ready to go as well. And of course, using good cyber hygiene. passwords, strong passwords, turning on multi-factor authentication on every application they can, and then using our no-cost tools to protect their network, their critical networks.
Marcy, I think cyber hygiene's a new one for us on this show. Is there any proof that we're better prepared for this year's election than we were in 2020?
Well, the EII-SAC just turned 6 years old, and for the last 6 years, we've been working with election officials across the country and in the territories to raise their cybersecurity posture. We've deployed lots of solutions, cybersecurity solutions that would harden their defenses, and we've also provided a lot of training, and we're talking to election officials in terms they understand. We're former election officials in many cases. So we're breaking down those barriers and making sure that they understand that cybersecurity is everybody's responsibility and that they need to take action. So I believe, yes, we are better prepared, but cybersecurity is a long-term game. It is not a one and done. It's constantly changing. And as you started the conversation with generative AI, that's the new thing that we are trying to build defenses around and prepare elections to deal with, election officials to deal with, especially as we move into the general election.
Marcy, great to have some time with you ahead of this Super Tuesday. Marcy Andino, Senior Director for the Election Infrastructure Information Sharing and Analysis Center. Great expertise coming there. Meanwhile, coming up for the first time in more than 9 months, Elon Musk is no longer the world's richest person. Bezos, he's back. We'll have more for you. This is Bloomberg Technology. Time now for Talking Tech. First up, Alibaba, spearheading its second major deal in AI this year, leading a financing round of at least $600 million for Chinese AI startup Minimax, as the e-commerce pioneer actually deploying its own capital in pursuit of growth. Now, the 2-year-old firm that it's backed has secured funds from not only Alibaba, but other investors that bring its now valuation to $2.5 billion, according to sources. Meanwhile, 4 ex-Twitter executives, including former CEO Parag Agrawal, they've sued Elon Musk for allegedly stiffing them on more than $128 million in severance payments after they were ousted from the company. The former top officials said Musk showed, quote, special ire towards them after he took over the company in 2022, publicly vowing to withhold their severance to recoup $200 million from the $44 billion deal. That's all according to the lawsuit. Let's talk about Elon Musk a little bit more, because he's been dethroned by Jeff Bezos as the world's richest person. The Tesla founder lost his position at the top of the Bloomberg Billionaire Index to the Amazon founder after shares in Tesla, of course, been under pressure to start this week. This marks Bezos' first return to the top of the index since 2021. First time Musk hasn't topped the ranking in more than 9 months, Ed. And this is, of course, as we see significant issues with Tesla and over in China, for example.
Musk has lost $31.3 billion of wealth so far this year. Bezos gained $23.4 billion. They're separated by $3 billion. What's a few billion among friends?
Are they friends? Feels doubtful.
They're not, no.
Meanwhile, coming up, they're added in space, added on the billionaires index as well. Meanwhile, let's just return to the state of cybersecurity. Cato Networks is with our CEO, Shlomo Kramer. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Let's get back to Bitcoin. We are now lower in the session, below 66,000 US dollars. Earlier, about an hour ago, Bitcoin touched its first record high since November of 2021, just above 69,000 US dollars. You see that all the time in different asset classes, like, right, Caro? You hit a record, there's enthusiasm, there's sentiment, and then it very quickly falls away. But you can see over a 5-day basis the kind of near-term momentum we've seen in Bitcoin. and its market cap also now globally nearer that 1.5 trillion mark. There's a lot happening in equity markets. You were right to point out earlier that it's Jay Powell week. We'll hear from him on the Hill later in the program. It is tech that is the drag on major indices. NASDAQ 100 down 1.6%. Apple is off session lows, but down 2.7%. Again, that third-party counterpoint research data showing weakness in China. Continuing to update you on Meta, we're getting reports from Down Detector that Instagram, Threads, and Facebook are all down. The company has responded through a spokesperson, ironically on X, the platform formerly known as Twitter, to say they're aware of it. Also, earnings continues. We're at the tail end, but CrowdStrike reports after market, and that brings cybersecurity back into focus. Right now, we've been thinking about cybersecurity in the context of Super Tuesday, the election cycle. Everyone is doing a lot to counter it, but the threats appear to be growing. Let's bring in somebody we're excited to speak to, co-founder and CEO of Cato Network, Shlomo Kramer, aka the godfather of cybersecurity. Some people have called you that, to be fair. Yeah. I want to start with the election and Super Tuesday. Sure. You know, earlier in the program, we attributed a ramp up in activity or risk to generative AI. Do you see that across your desk at the moment?
Absolutely. As well? Generative AI is the next phase in cybersecurity, both from an influencing the opinions as well as industrializing the attacks. So absolutely. And thus you need AI for protection as well.
Shlomo, we welcome you to San Francisco.
Thank you for having me.
How much of the conversation that you're having while you're in town is about the election, or do clients and your peers have other concerns?
Well, it's mostly around cybersecurity in general, and the election is one big transaction that needs to be protected. But I would say that if you look at the new economy, the number one risk to it is cybersecurity.
And yet, post this earnings season of companies that you wrote the first check into, Palo Alto Networks or other cybersecurity names, they're down because people aren't spending at quite the pace that the market had anticipated in their cyber defenses. Do you worry about that?
Yeah. Actually, we are here, and Cato, my company, is here to solve that because the security industry for 30 years have focused on the what and created a huge number of point products that essentially are not consumable by most enterprises. So the cybersecurity market is broken. And the need to fix it is by finding new ways to consume it. And the platform that Cato provides is the new how that will fix it.
Let's talk about that. Secure Access Service Edge, SACE, as one might say it for short, seems to be the new way in which you think you should be delivering cybersecurity across a platform workload, unlike, you say, now one of your biggest competitors, which is Palo Alto Networks. Right. How much is that resonating? How much are you seeing enterprises adopt? Or indeed, is it governments? Who are your end consumers for this at the moment?
So I would say that the pain of point solutions is everywhere, but at least at the mid to large enterprises, the gap between resources and challenges is the most severe. So the need for SASE and platforms such as Cato provides is the most acute. And we see the most traction in this type of organizations today. But eventually, the concept of platforms and consumption through platforms is going to replace the entire cybersecurity market.
Let's talk about the market and its players. We have a little David and Goliath story on our hands. You wrote the first seed check for Palo Alto Networks.
Right.
Now you have Cato. It's a smaller player. But if we extrapolate out, you're basically saying, I don't think the legacy big guys have done very well. Yeah. I'm going to try again to do something a bit different. You're
absolutely right. And there was also a first generation Checkpoint where I was the co-founder. And Palo Alto came and simplified through convergence and through a platform a market that was software-based by using an appliance. But guess what? Digital transformation came. and created a very fluid way of doing businesses. Work from anywhere, applications are anywhere. So there was a need for a new type of platform, and that's essentially what Cato provides. And all the appliance vendors or the second generation vendors are trying to adjust and adapt, but they bring with them so much baggage that it is very difficult for them.
We've talked about where technologically the threats are coming from, what the concerns of your industry are. But geographically, where are the threats coming from? You know, we're kind of zeroed in on a domestic situation, but as we learned, foreign entities, China, Russia, are active in this space.
Right, absolutely. And we are talking about times of peace, when you're seeing this massive international cross-border attack happens. And organizations, especially the mid-enterprise, are suffering. And imagine what will happen at times of war. You don't need to imagine much. Go to Ukraine in 2017 with no Petya, and you would see that 80% of the economy was down because of this type of attack. So really fixing this mass market problem of cybersecurity is critical as a defense against these times of wars.
And it's notable, of course, our hearts go out to the fact that, of course, you're traveling to us from Israel at the moment, and I know that always something that affects your businesses and those, of course, across the border as well. I'm interested, Shlomo, in your business in particular, at a time when the market was having real difficulties. We were thinking in the doldrums of 2023, VC had been pulled back, and you were still able to raise funds. And you were still putting in, $238 million was what you raised back in September of 2023. Lightspeed Ventures there once again. You've talked a lot about wanting to go public. At the moment, are you thinking about that will be a 2024 endeavor? How are you assessing the American markets, also as well as the American cybersecurity markets that you sell into?
Well, Cato is a leader in this next generation SASE market, and being a public company is a milestone, which we will get to when both company and markets are ready. But absolutely, this is an opportunity to build a large public company that will lead this category.
Shlomo Kramer, we really appreciate you coming in to visit us, or when you're over on the West Coast as well. Cato Networks will keep up to speed with the growth of the business. Meanwhile, coming up, we're going to be discussing how organizations can ensure an ethical use of artificial intelligence within their workforce in particular. We'll have the latest from the Deloitte survey on AI ethics. That's next. Ed, what were you watching?
I'm looking at shares of Alphabet, parent of Google. In the first instance, because the Digital Markets Act kicks into effect this week, we've zeroed in on Apple because of their EU fine and the need to compliance. But I'd also bring you a small update. The Down Detector is now also saying that YouTube is experiencing outages alongside our reporting that many of Meta's platforms are currently down. The stock down 1.5%. We will keep an eye on all of it. This is Bloomberg Technology.
Back to artificial intelligence and its impact on the future, because San Francisco-based venture fund SV Angels, well, it's just written an open letter making a pledge to help build, quote, AI that improves lives and unlocks a better future for humanity. It's yet another open letter that we've seen, and this time this one was signed by OpenAI, Google, Meta, Microsoft, and many others. And look, maybe it is one way, some would argue, to think about how to implement AI ethics. Ed, we're going to get into the more specific ways in which you can actually bring that to bear in a business.
They're not alone in that. Deloitte released a new study today about just that, how organizations can prepare their workforce for an ethical and responsible use of AI. Joining us now for more is Deloitte Technology's Trust Ethics Practice Leader. He's also the author of Zero Latency Leadership, a book that takes a look at the leadership of the age of AI. Bina Amanaf joins me on set in San Francisco. Clearly, there is a concern about how a even technologically savvy, for want of a better expression, workforce uses AI from an ethical perspective. I know Deloitte, I know how Deloitte works. There must be a reason that you felt compelled to publish that study.
Yeah, absolutely. Look, I'm a technologist by training, and we've seen the rapid evolution of technology. But technology comes with its side effects. There are risks that come alongside it, and there's not as much focus put on the ethical risks or the trustworthy risks that come with technology. So we thought it was important to highlight it, raise the awareness, and really get companies to address the ethical risks so that we can truly get the full potential of AI.
Beena, I'd say that the media, the discourse, the latest news has been doing a lot of the heavy lifting for you. I mean, we're just talking about the latest open letter. There has been a lot of hand-wringing about ethics, implementation of AI. We've also seen, of course, concerns about the latest image generation and whether or not by trying to correct for one element of bias, they're overcorrecting in another direction and not getting historically accurate images out. Beena, I'm interested as to ultimately what CEOs are asking you that they can do to implement right here, right now. Do they slam on the brakes of using the latest ChatGPT or generative AI tool?
Absolutely not. Look, there are relatively low-risk ways to use the technology, and it's important to identify the right use case, right? I think this is a very, very powerful technology. We see a variety of uses of it across different products, different functions. It's about finding that right opportunity where you can get the maximum value while minimizing the risk. And what CEOs are looking at is how do you implement the right ethical policies and guidelines to get that maximum benefit while minimizing the risk.
We're just showing a chart.
Sorry, Anne.
Oh, I apologise, Caroline. I couldn't believe what I just saw in that chart. Director Alice, if we can, let's bring it back. 84% of respondents said they're currently using AI. What for? I mean, think about all of the businesses that Deloitte works with, big and small. What do you mean 84% of them are using AI?
It's, and I don't think it's generative AI specifically, which is the current flavor since the last 18 months. It's AI for predictive analytics, for maintaining your jet engine, for, from a finance perspective, from auto-approving expense reports, right? There are a lot of boring AI use cases that companies are focusing on and have been focusing on. Look, I myself have been applying AI for over 12, 13 years, right? So generative AI is a current flavor, but when you see that number, it's really talking about how companies have been using AI for a much longer time.
And now companies try and get in place the guardrails. Do you think we need more government-enforced guardrails, found in an executive order, for example?
Yeah, and I think, look, Caroline, there's absolutely a need for AI regulation and policies and best practices. If you take a step back and look at it, AI as a technology is still maturing, right? And there's a parallel stream, which is these ethical risks or nuances that come with using this technology. Call it the side effects. It's the impact to the workforce. It's the impact to the organization itself, right? And then the third stream is AI regulations and policies. And each one of these move at a different pace, but it needs to happen, and we've seen it across different industries happening over time.
I think there is an acceptance that a lot of the focus is automation, right? Removing the role of a person that might have been mundane. What kind of people do firms need to hire if they're going to think about AI?
Our survey shows, and this was specifically focused on AI ethics and trust, our survey shows that companies are actually hiring more AI ethics researchers, compliance specialists, tech policy analysts. For over 50% of organizations are going for that ground level roles, and about 38% are going for chief trust officers or chief AI ethics officers. So there's really that need to focus on AI ethics research and bring it to an organizational and use case level.
We thank you for bringing your expertise on it today. Deloitte Technology Trust's ethics practice leader, Beena Amanath.
Thank you.
Meanwhile, coming up, we'll get back to it. Bitcoin's rally. Is it sustainable? Well, clearly it hit a record high. It's just come back down from it. We're going to dig into it with Jalak Jobanputra from Future Perfect Ventures. This is Bloomberg Technology. Let's get back to Bitcoin. It hit a new record high, and of course, its actual record market capitalization had already been hit because there's more Bitcoin in circulation since November 2021. And so now we hit above the $69,000 mark and almost coming up to a 1.25, let's call it almost $1.5 trillion market capitalization. Let's get to more broadly how this affects the rest of the ecosystem and investing in it. Jalak Jobanputra is with us, founder and managing partner of Future Perfect Ventures. And you were in crypto before crypto was cool, as some people have been able to say, Jalak. And I'm interested, therefore, on whether with Bitcoin ramping up higher, people worrying about leverage coming to the system once again, are we just bracing ourselves for consolidation, or are we on our march higher for sustainable reasons?
Well, we have a confluence of factors that make this rally different than rallies that we've had previously. I mean, first we had the ETF launches, which were off to a bit of a slow start, but now BlackRock's has been the most successful ETF launch in history, and we've continued to see interest from institutions coming into the sector. BlackRock is also launching a Brazil ETF product for spot Bitcoin. So we're going to see not only the U.S., but the rest of the world continue to have more access. So that shows that, we are in a different situation than we were in previous rallies and consolidation. And then we also have the Bitcoin halving coming up, or halvening, as some of us call it, which traditionally constricts the supply of Bitcoin because it reduces the rewards that Bitcoin miners get. So these two factors, along with more, I'd say, favorable regulatory movements around the world, point to us, continuing to go higher. That doesn't mean we won't have pullbacks along the way, but the macro environment is certainly supporting higher highs.
The exuberance around the OG of Bitcoin has spilled into other areas. We've seen other protocols do well. Of course, Ether's on the up, Solana. But then, like 2021, the meme coins come back. Dogquid Hat doing particularly well at the moment. Bonk, for example, some ridiculous names, but some of them thinking that there'll be some practical use case. What are the spillover effects? Are you worried about too much exuberance in other more, dicey areas of the market?
Look, there's always going to be speculative activity when we see, Bitcoin and Ethereum and some of the blue chips continue to go higher. People are looking for even higher returns with some of these lower liquidity, long tail protocols, and some of them are these meme coins. And that's to be expected. I think investors just need to realize that they're dealing with more volatile assets as they get into these long tails, but we've certainly seen some outsized returns in some of those names that you mentioned.
So there are more long-term holders of Bitcoin, away from inflows, outflows of ETFs, the price. What does that tell you, that data point?
Well, I think it shows that longevity of this asset class, that we've seen more and more people moving Bitcoin off of exchanges, which means that they're not going to trade, that they're storing them in highly secure ways, which means that they're looking at this as an asset that could hedge against inflation. I mean, we've seen a lot of back and forth on, are interest rates going to be cut? Are they going to hold steady? Are they going to increase? And Bitcoin provides an asset that is independent of this government policy, and more people worldwide want to hold this.
Caroline mentioned you were investing in blockchain startups before it was cool. Has your approach changed over the years in the types of company you now want to back?
Well, what's exciting now versus 2013, when I first started investing in the sector, I mean, Bitcoin was really the only publicly traded crypto that you could invest in. And then there were a number of exchanges that we invested in, data analytics companies around crypto assets, but there really wasn't a lot of infrastructure there. And now we've seen 10 years of build out, not only in Bitcoin, but in Ethereum and all these layer twos, the scalability. So I also invested in the early internet in the mid 90s and the late 90s. And, back then we couldn't watch, videos online. And so in 2013, I say, we couldn't easily access and trade Bitcoin. And now 10 years later, we have ETFs. And so it's very similar progression, I'd say even faster progression as we see the build out. And so, just like, any assets need, custody, need market makers. We've seen all of that. And so the opportunity set for investing is even wider than ever before. I mean, we are investing out of our third fund. We'll be out to market with a fourth fund shortly, and we've just seen more and more interest in growth.
Jolak Jobanputra, founder, managing partner of Future Poet Ventures. Great to catch up. And we take your word. You were in it before it was cool. Quick update, Caroline. Google's issued a statement saying it's working on a loading issues fix for YouTube. Curious timing that Down Detector says YouTube is down along with those other platforms. Yeah, I mean, across the board, we're seeing Facebook being impacted, Instagram as well. We'll have to see, of course, at the moment, plenty of rather amusing memes coming out of one Elon Musk at the moment, as some of these communication chiefs have to go to X to tell us about the acknowledgement of some of these down issues. But meanwhile, that does it for this edition of Bloomberg Technology. Please check out the podcast. That's where you can find it. From New York and SF, this is Bloomberg.